One thing that always comes up in any discussion about risk management in real estate is E&O insurance, so errors and omissions insurance. So just going to cover a few things just to know about it for context, and then a few things more in the nitty-gritty that matter if you potentially in a pinch. E&O stands for errors and omissions insurance. This is a coverage that most companies will carry, and there's typically an expense that the company charges to agents for that coverage. It's not actually legally required coverage, so there are companies that don't have it, so just as an FYI. There to cover you in the event that you've made, as a real estate professional, you've made some kind of error in how you're doing your business practice or some kind of omission. You forgot something. What it does not cover is the more interesting discussion, right? Specifically, a handful of things you need to know that errors and omissions never covers is fraud. So if you made an error or an omission, those are mistakes. Something you've done intentionally will never be covered. There's no policy that covers intentional mistakes. Another common area for excluded items are just things that aren't reported to the errors and omissions companies. Every broker that has errors and omissions, they have to renew it every year. You have to submit an application for that renewal. On that application, they want to know about any claims or potential claims, things that might turn into a claim in the future. This is very broad language, and so the key here is these errors and omissions companies, these insurance companies want to know, did something happen in this past year that might result in a claim into the future? So no one has made a claim, either sued or asked for money or demanded some type of financial relief from someone in this transaction. But even if there was potentially a tense exchange between the buyer and seller, or a client directed at you and they didn't formally pursue a claim, but it's a reasonable person would say, well, they might have a claim later based on this exchange that happened. If that happened and it wasn't reported to the insurance company, and then later on a claim does arise, the insurance company could say, well, hey, you didn't tell us that this had happened, and so because you didn't tell us, and now this has happened, there is no coverage for that claim. So this is really tricky. It's not just that the broker doesn't know, it's even that the agent didn't report that. And it's the broker who's filing that renewal for the insurance. So if you don't tell your broker, hey, this thing happened, then your broker doesn't know about it. They can't put it on their coverage. Therefore, it's very likely not going to be covered in the following year or future years where that happens. So that's another thing to watch out for when it comes to E&O. There's other variations that you want to make sure you've checked with your company if this is relevant to you, but some insurance policies for errors and omissions are different based on who the seller is. So if you as an agent are the seller of a property, there may be additional requirements. Things like, even if the buyer doesn't want a home inspection, maybe you have to provide a home inspection if you want any coverage from the insurance company. Same with potentially a home warranty. Maybe the buyer doesn't care about a home warranty, but the E&O company will say, we're not going to actually extend coverage unless there was a home warranty on this property. And that, again, may only be the case if it's the agent owns the property that's being sold. That's one category of things to watch out for, is agent-owned purchases or sales. Those are transactions where the agent is the principal. If there's maybe another layer of requirements from the insurance company in that case. Another key thing to watch out for with the E&O is your deductibles. So there's a lot of small issues that I think sometimes people think, oh, I'm gonna be okay, I have E&O coverage. But you wanna know what the deductible is. At least in California, E&O carriers, many of which have left the state, they just don't offer that insurance, which means the ones that are left tends to be more expensive. And one of the ways that companies cope with this is they take a higher deductible, meaning it has to be a larger issue before the insurance kicks in. And so something you want to check on, a lot of times these smaller issues, maybe there's coverage, but you won't want to use that coverage anyway because the resolution is smaller than what your insurance coverage would cover anyway. For example, if you have a $5,000 deductible and it's a $4,000 issue, you're not going to deal with insurance most likely in that case. Where it becomes more tricky is, let's say if you have a $5,000 deductible, what you think the issue is a $4,000 issue. So then you somehow, with your manager and broker, everything gets worked out and there's no insurance involved. But that $4,000 issue actually wasn't resolved for $4,000. 6 months later, it balloons out of control in some unexpected way, and now it's a $50,000 issue. And like we talked about a minute ago, it has to be reported to insurance before your next renewal in order for them to cover it typically. And so now you thought you handled it for $4,000, now it's a $50,000 issue and you wish you had coverage and you don't because you didn't report it at that time because you thought it was resolved. Just another thing to watch out for. I was told years ago from an insurance broker that deals a lot with E&O in California specifically, that they expect a claim about 1 out of every 250 transactions in California. We find that to be exceptionally high. So we're probably close to 10,000 transactions as a company and have not filed a claim. Obviously, we don't want to jinx ourselves there, but it's different for different companies. Either way, we encourage people to know that it's there, understand how it works and how it doesn't work, and follow all the other business practices that we're going to talk about under this umbrella of risk management, in the hopes that you never have to think about E&O anyway, because you've handled everything through preventative measures rather than ever really needing this safety net of E&O insurance. Thanks for watching. I hope this was helpful. If you learned something or if this helped you solve a problem, follow me for more.